Blackwell in mathematics is not a chip. Blackwell is the name of a platform. People believe that we manufacture GPUs, and we do, but GPUs no longer look the same as they once did. This is Hopper, who revolutionized the world. Crowd cheers. Crowd cheers? Blackwell, it's all right. Hopper in this video will take a closer look at NVIDIA, a powerhouse in the artificial intelligence and technology space, as it navigates through groundbreaking advances in machine learning and artificial intelligence. We'll also examine how these developments might affect NVIDIA's market position and consider the broader tech sector, drawing comparisons with Tesla's creative application of AI and automotive technology. Finally, we'll examine Wall Street's most recent analyses and bullish sentiments toward NVIDIA, revealing what this means for the company's future and possible investment opportunities. So take out your notes and join me as we explore the fascinating possibilities of artificial intelligence and the complex world of high-tech investments. Don't forget to press those like additionally to subscribe buttons. Greetings and welcome to Tesla Stock News. Let's get this video going. The release of the Blackwell architecture by NVIDIA in the most recent quarter was a welcome surprise that increased investor confidence. The key question at this point is whether NVIDIA has to keep revealing innovations like this to keep momentum. Prior worries centered on a possible air pocket or gap between the present Hopper design and the upcoming Blackwell. However, the strong demand for Hopper last quarter and the optimistic expectation for Blackwell by year's end have allayed these worries. Expectations are high, with many betting that NVIDIA's financials will hold strong, though there's a running joke about the unpredictability of stock movements post-earnings release. The overall sentiment remains optimistic, especially within the AI spending sphere, which continues to show exceptional resilience despite widespread concerns about sustainability. It seems premature to worry about NVIDIA's market position on the investment front. NVIDIA's historical pattern as a cyclical company sees it riding waves of fluctuating demand. Currently, demand is peaking, prompting debates on whether this heightened level is sustainable long-term. This brings us to a crucial point. While NVIDIA's growth has been stellar, marking it as a heavyweight in technological advancement, especially in the automotive sector, where AI and edge computing are revolutionizing vehicle capabilities. The stock's trajectory resembles a high-stakes game. Investors must decide if they're witnessing a temporary peak or if NVIDIA can truly sustain these highs indefinitely. As the earnings announcement looms at the end of August, the anticipation builds. The broader market context, especially with the Russell 2000's recent performance, also plays into the story of a tech industry with its own set of difficulties for individuals determined to keep on top of the most recent developments in the market and data insights. Joining specialized channels like the one specified in the video description could give them that advantage. Recent developments in the computer industry have given rise to conflicting narratives about artificial intelligence. AI investments. While there is a growing sense of optimism due to the rapid growth in AI capabilities, investors are also beginning to express caution, indicating that tech stocks, whose stellar performances may have been overaccelerated despite recent market jitters, may have a potential fallout. Although concerns were raised last year, companies like NVIDIA exceeded expectations with impressive financial results. The fear now is that the massive investments in AI, particularly in AI chips required to power generative AI platforms, might not sustain their current momentum. However, last Friday's rebound in chip stocks led by NVIDIA and AMD among others allayed these fears, suggesting that AI demand remains robust. These findings suggest that the potential of the AI sector is still in its early stages. The partial rebound of chips equities from their earlier July losses indicates the continued need for AI technologies. Wall Street analysts, who believe that this is just the start of a tech boom propelled by artificial intelligence, AI, support the sentiment. They estimate that government and corporate spending on AI could reach $1 trillion in the next few years, placing chip manufacturers at the forefront of this anticipated upsurge. Additionally, the scenario is closely related to another tech giant, Tesla, which is renowned for its innovative application of AI and automotive technologies like NVIDIA. Given that its cars depend more and more on chip technology produced by companies like NVIDIA, immediately benefits Tesla, which is well known for its creative application of AI in electric vehicles, as automotive technologies increasingly rely on AI for features like increased safety systems and autonomous driving. The convergence of Tesla's applications and NVIDIA's advancements shows a common path toward more AI-integrated technologies. The long-term view for AI is optimistic, despite the current market uncertainty. Major tech companies are not only continuing, but even probably expanding their expenditures in AI hardware, which will support the expansion of businesses like NVIDIA. This ongoing dedication highlights a larger industry. Today's unusually high activity in NVIDIA's stock is due to the trend where AI is viewed as a fundamental shift in how businesses and economies operate, rather than just a technological advancement. The volume of over 66.934 million shares traded has significantly exceeded the 100-day average volume of 9.73 million. The recent 10% investment by NVIDIA in Serve Robotics and the jump in trading are related. Serve Robotics is currently trending for growth investors on platforms like Yahoo Finance. NVIDIA makes strong arguments for attention. The company's historical EPS growth rate stands at 59.7%, but it's the projected growth that captures the spotlight, a staggering increase of 17.4%, this year vastly outperforming the industry average, which anticipates an EPS decline of 15%. Additionally, NVIDIA's year-over-year cash flow growth of 33.7% dwarfs the industry average of 14%, underscoring its robust financial health as confidence in NVIDIA grows. Earnings estimates for the current year have been adjusted upward, with the Zach consensus estimate increasing by 0.3% over the past month. This positive adjustment reflects a broader investor optimism towards NVIDIA, despite shifting sentiments toward competitors like Broadcom, while a significant contender is targeting the lucrative AI silicon market, anticipated to be worth over $0.050 billion in the next 5 years. Despite Broadcom's dominance in certain segments of this market, NVIDIA continues to be a focal point for investors, with projections suggesting it could reach a market capitalization nearing $50 trillion within the next decade. These developments also resonate with Tesla's trajectory in the tech industry, particularly in AI-driven automotive technologies, as NVIDIA advances in AI. Tesla gains from these innovations as well because it uses AI in its cars to improve safety features and autonomous driving. The synergy between Tesla's automotive applications and NVIDIA's chip breakthroughs highlights the interrelated growth potential within the tech sector, which are driven by machine learning and artificial intelligence. The confident outlook from Loop Capital's lead analyst Ananda Barua, who released a research note on July 22nd, keeping a buy rating for NVIDIA and upping the one-year price target from $125 to $175 per share, indicates that Wall Street is looking favorably on NVIDIA. With its current stock price of $7.59 per share, this revision indicates a robust growth trajectory for NVIDIA, with an estimated upside of almost 54% over the next 12 months. Wu's optimism stems from the fact that NVIDIA is still leading the AI space. The company's machine learning and AI advancements are setting the standard for the industry, which is especially important given the growing demand for AI applications in a variety of industries, including data centers, automotive, and healthcare. Although such widespread development is anticipated to greatly increase NVIDIA's revenue and strengthen its competitive edge through strategic investments and an increasing product range, it's important to understand the outside forces that could temper NVIDIA's growth. Growing geopolitical unrest, potential difficulties include unstable economies and fierce rivalry from other AI giants. In a comparison examination, NVIDIA's stock performance could be impacted in the near term by the inherent volatility of the tech industry when it is compared to Supermicro Computer. Although Supermicro is expected to have a higher average annual earnings growth rate over the next 5 years, NVIDIA continues to display impressive strength. Its huge cash reserves allow it to easily navigate pressure from the competition. As it takes advantage of the AI gold, NVIDIA's strategy has been built around this financial stability.